Higher interest rate environments can make it difficult to buy a home, but there are silver linings and workarounds. Hi, I'm Liz Wilgeroth with Homes by Liz and One Sotheby's International Realty, serving all of beautiful Brevard County, Florida. So in these high interest rate environments, you have less competition, you have lower prices, and you have eager sellers. And when you have eager sellers, they may consider seller concessions like paying some closing costs or paying down the interest rate. So today I have Zane here from PRMG. He's one of their mortgage loan originators, and he's going to talk about the 3-2-1 buy down. And that's one of the that people are using right now to bring down interest rates so you can get a lower monthly payment.
Yes, so our 3-2-1 buy down program is essentially paid by the seller. That's a requirement of the program. And instead of utilizing the seller concessions towards closing cost or a permanent buy down of the rate, which is actually capped because mortgage originators can only charge so much in terms of total fees. So there reaches a point where the concession no longer is valid. And with that being said, the 3-2-1 buy down is a better option for temporarily lowering the payment of the mortgage for a 3-year period.
So on a $500,000 house, let's say the interest rates right now are 6%. So in a 3-2-1 buy down scenario where you have the 3 years, explain to me how the interest rate goes down.
Yeah, right. So just principal and interest on a $500,000 loan, you're talking close to almost $3,000 a month just in the principal and interest. So with the 3-2-1 buy down, it basically sets aside money in an escrow account that actually belongs to the buyer. So once it's finalized, the buyer has that money in that escrow account and it temporarily pays the interest down on the loan. So in the first year, it pays it down to 3%. Then the second year is 4%, and then the third year is 5%, and then the loan fully amortizes.
Got it. Also have a 2-1 buy down, which explain that to us.
Yes, so obviously getting a seller to give that big of concession in today's market is possible, but it's not always likely. So with the 2-1 buy down, you buy down the rate for 2 years. In the first year, like you're saying, if you start at 6%, it'd be 4%, and then in the second year, it'd be 5%.
Gotcha. So on a $500,000 house for a 3-2-1 buy down, it costs about how much if you were looking for a seller concession?
If you're looking for a seller concession, you're talking roughly around $20,000.
So that's not always possible. That's a large concession. So let's just talk about the 2-1. So how much on a $500,000 house on a 2-1 buy down, what does that cost the seller?
So just as a whole, you can roughly estimate that around the price of the loan, about 2.5% for a 2-1 buy down. So if you're talking on a $500,000 home, you're talking in that $12,000 range, which is
and
achievable.
And that's very doable.
Yes, definitely.
Yes, very doable, because people, rather than reducing the price of the home, they give a seller concession of $12,000, and you can use that for closing costs or using the 2-1 buy down.
Definitely, and like we talked about earlier, if the client does choose to refinance, that money is still there.
Good.
And if they haven't used all of it up, they can apply it towards the closing costs on the refinance or whatever they choose to do.
Okay, perfect. Now, not everyone qualifies for this, so tell me the qualifications to be in this program.
Yeah, definitely. So this program is an in-house program of PRMG. It's not something that many other people do. And with that being said, there are some requirements. So it requires a person to have a 620 credit score.
Okay.
They need to be their primary residence. And it can actually apply to condos as well, not just single family homes.
Gotcha. Okay, perfect. Now, in a scenario for a seller, how is this helpful for them?
Yeah, so in today's market, sellers are faced with the fact that homes are just sitting on the market for a lot longer than they were just 6-8 months ago.
Yep.
Some of that's interest rates, some of that's supply going up. But with all that being said, sellers have to get more creative in ways to attract buyers. And the typical route is that the real estate agent on the listing side will tell them to drop the price.
Right.
But typically in that sense, you're talking about 4 to 5% of the listing price. With this, and if you're offering a $10,000 seller credit towards a buy down, you could save that borrower, $5,000, $6,000, $7,000 out of pocket just in their first year of home ownership, which is a lot more attractive to them than getting into a loan at 6 or 6.5%. That they can afford the payment, they can qualify for it, but it's kind of strapping them down.
Yep. And then for a buyer, so we've kind of talked about that. You're going to save money monthly when you're in the 3-2 buy down or the 2-1 buy down. But there is one more qualification I think we missed. So you have to qualify at the 6%, right?
Correct.
So can you talk about that?
Yeah, so with a temporary buy down is the same as any other special editions of seller credits, is that the lender must still qualify the borrower at the note rate.
Right.
So with that being said, if someone doesn't qualify for the mortgage loan, they can't use the buy down to then qualify for it, because the idea is that eventually that loan is going to fully amortize, go up to the 6% rate after the buy down period ends.
Right.
And the
They'll
loan,
have to afford it.
they won't be able to
Yeah.
afford it, exactly.
Okay, perfect. Thank you so much
Yeah.
for your helpful information. So if you're looking to buy a home and you're kind of on the fence about buying because of the interest rates, there are ways to do some workarounds. Again, I am Liz Wilgeroth with Homes by Liz and One Sotheby's International Realty, and I love what I do, so you will love what I do.